It's Wednesday, July 19th, 2023. A lot to talk about today. Before we start, please make sure to like this video, share this video, and make sure you subscribe to the channel. If you want to support the channel, support the message, make sure you subscribe and make sure that you share these videos. But I want to get right into it today. We are really in critical condition as a nation. This economy is in critical condition, and people can tell me till they're blue in the face that the stock market's going up, everything's fine. I'm wrong. Everything's okay because the stock market is going up. These people are absolutely delusional. They have no idea what they're talking about. There is no connect between the stock market and the U.S. economy at this point. The U.S. economy continues to collapse. It is spiraling out of control. And here's a big problem that people are now facing, and that is the ability to borrow money. It's becoming more and more difficult for the consumer to borrow money, and it's going to become a lot more difficult here in the very near future. This article came out about 2 days ago on USA Today. More Americans rejected for loans just as they may be feeling tapped out, Fed survey shows. As Americans look for a loan to stay afloat, it may be harder to get one. People are not qualifying. They don't have the ability to qualify for a lot of these loans, as their credit is being wrecked right now, as they're losing their cars, late on payments, utilities, late on credit card payments. The rejection rate for people applying for credit jumped to 21.8% in June. That is up from 17.3% in February. This is the highest level in 5 years. Think about this, ladies and gentlemen. People applying for credit, 21.8, that's 22 out of 100 people rejected. That's an enormous number. The four biggest U.S. lenders wrote off a combined $3.4 billion in bad consumer loans in the first 3 months of 2023, a 73% increase from a year prior. A 73% increase in bad consumer loans. They can tell you again till they're blue in the face, stock market up, everything's fine, but people cannot borrow money now. And the reason a lot of people have to borrow money is just to stay afloat. They're borrowing money to pay for essentials. So where were the most rejections? This is pretty interesting. Well, auto loans saw a rejection rate of 14.2% from 9.1% in February. This is the highest level since this data was first collected in 2013. So over 14% of people that go and try to buy a car are going to be rejected. And that number is going to climb. Rejection rates, credit cards. If you were trying to apply for a credit card, rejection rates rose 21.5%. Credit card limit increases. People that were rejected, 30.7% of people that wanted to get a credit card increase on their limit. 30.7% rejected. People applying for mortgages, 13.2% rejected. Mortgage refis, 20.8% of people trying to get their mortgage refied, 20.8% rejected. These are big numbers, and this is just the beginning. So you can see now the banks are beginning to tighten up, and you know, for a very long time, many of you reported the same thing, getting every day in the mail, credit card deals where, oh, here's $5,000, here's a $10,000 line, or your present credit card bank would say, hey, do you need more? Do you need a higher credit line? We'll give you a higher credit line. They were passing credit cards out like candy. Now, I don't know if they're still doing that. Please comment down below. Are you still getting these offers for more credit cards? At some point, I think we're going to see the opposite happen, where they're going to start cutting these credit lines way down. They're not going to be offering these credit cards like candy like they once were. More rejections while the consumer is applying for more loans. That's what we're seeing right now. So as people become more dependent on credit, we're seeing more people rejected. And as people need this credit to buy the car, for the credit cards, to pay for the essentials like food and utilities and rent, they're being rejected. So if we look at auto loan applications. They rose 30.7%. Credit card applications rose 32.88%. Credit card increase applications rose 42.4%. Wow, we're seeing so many people being rejected. As banks reduce their lending, the consumer is going to come under a lot more pressure, ladies and gentlemen, because the consumer is so used to borrowing money. The consumer is so dependent on borrowing money. People don't save up and buy a car, and people don't save up, $5,000 or $10,000 and pay cash for a used car. No, they need a new car, on average $48,000, and they will mortgage that thing or have payments on that thing for 7 years. People don't know how to save, and now it's going to become very, very difficult to save because inflation is destroying their savings. It's destroying real wages. I don't really see a break anywhere, maybe a little bit here and there, but inflation to me, have you really noticed a difference in inflation from a few months ago, 6 months ago to present day? I really haven't. But what we do know is more people are trying to borrow money and more people are rejected. And so this is going to be a big problem because the more people that are dependent to survive by borrowing money, they're not going to get the money. So what's going to happen to them when they cannot buy a car, when they cannot get another credit card, and they've tapped out their other 5 credit cards, and they need a higher line of credit, or they need more additional credit cards, and the cavalry is not coming. These people are going to be in very, very big trouble. At the same time, when people are going to begin to notice home prices going down, losing equity in their homes, they can't tap into their homes now because of where the mortgage rates are. And so now they can't play that card where people before could pull money out of their homes, use it as an ATM. They can't do that now. So they're running to the credit cards and they're getting denied. So this is going to be very interesting to see how this plays out. But when banks stop lending, we're going to see very, very serious trouble. It's going to be a big problem. And you look at where we're at right now, there's so much outstanding debt out there. What do we have? About $1.8 trillion in student loan debt. And people are going to have to begin paying that student loan debt back in around 3 months. We have more rate hikes coming. July 26th, I believe, is the day. We'll get another rate hike. And I do believe we're going to get 1, maybe even 2 more hikes after that. And they're going to keep these rates high. Commercial real estate continues to tank. Today they're saying, well, it's just office buildings, nothing to worry about. It's not just office buildings. It's shopping malls, it's hotels, it's resorts, it's office buildings, it's restaurants, it's retailers, it's everything across the board. But yet today they say, don't worry, it's just office buildings, nothing to worry about. Ladies and gentlemen, you better worry because a lot of pensions are attached to all this commercial real estate. And they're not talking about that. What about what's going to happen to all the bondholders? What's going to happen to all the pensions? What about hedge funds that are heavily invested in commercial real estate? And what about the banks themselves? Many of these regional banks are going to get absolutely smoked, destroyed from this collapse. And it's just beginning, but they don't want to talk about it. They don't want to scare you. They don't want to scare the markets. They want you in la la land. They want you to just keep believing the FOMO, everything's okay. The Fed also wants to continue to see unemployment rise, and it's not rising at the rate that they want to see it rise. And they're still, they're still being told that the economy is doing fine, that the consumer is strong, they've got money, retail's fine, unemployment's at 3.6%. So why would the Fed, with this information, even though I don't believe a lot of this data, and I know most of you don't either, but with the data that the Fed is getting, why wouldn't the Fed continue to raise interest rates? Tight labor market, 3.6% unemployment, GDP rising, people spending money. Of course they're going to raise. 20% of the U.S. population now is going to have to pay their student loan obligations back, and that roughly is about $400 to $500 a month. So that's going to be another cause for concern for this economy. But I was thinking today, as I'm reading this data, that just what's the cost? What's your monthly cost? Just paying the bills. Let's just say for right out here in California, if you have a dilapidated apartment, an old dilapidated 1970s 2-bedroom, even a 1-bedroom, in Orange County, California, you're going to be paying probably around $2,000 a month. Let's just say you got a new car, nothing great, maybe a Honda, Toyota, little SUV, okay, your payment's $750. Gasoline, you're spending, this is very conservative, $200 a month. Car insurance, $100 a month. Your phone bill is $100 a month. Your minimum credit card payment is $100 a month. Food every month, $400. Utility bills, I'm going to throw on $300. So just with that, and there's a lot more we could add to it, but just with that, you're at $3,950. So let's round it off to $4,000, and that's before taxes. That's before you even think about going out to dinner. That's before you even think about buying a latte. You're spending $4,000 a month just in overhead before taxes. I don't know how people are doing it. I don't know how people are doing this. Please comment down below. But this is a very conservative number. How in the world are people doing this? Now you add 2 kids to this, health insurance to this, and the numbers skyrocket. I don't know. I don't get it. Something just does not add up with all this. I don't see how the consumer can be strong. I don't see how the consumer right now is not getting very, very nervous. I mean, you go out to lunch now, it's $20. You go get a corned beef sandwich at the deli, it's $20 for a corned beef sandwich at the deli. You go get some spaghetti meatballs, $20. That used to be like $5 back in the day. $20 just for spaghetti and meatballs. You don't even get a drink with that. You don't even get a smile with that. I do truly believe that because of everything we're seeing, and people are getting in so much trouble, and people have been living beyond their means, there's no doubt about it. And when you live way over your head, when you live beyond your means, and things like this begin to happen, like inflation, where prices are spiraling out of control, layoffs, and you're living over your head, you're not prepared, you're not able to adjust to the economy. And many people cannot adjust right now because they have too much overhead, too much debt, too many bills, and they cannot adjust. You got to stay small right now. You got to stay defensive right now. I've said this a million times. If you make $100,000 a year, live like you're making 50. That's how you get through this. That's how you stack capital and cash away. This is how you buy assets. This is how you prepare yourself for the fire sales that are coming. The stock market, ladies and gentlemen, is not reflecting the true condition and health of the U.S. economy or the true health and condition of the U.S. consumer. Both the economy and the consumer are in big trouble. And I don't think that there's any way you can save this at this point, because at some point they will lose control. The Fed has, in my opinion, no choice but to keep raising. If they do the opposite and begin to print money and lower rates again, you're going to see hyperinflation in America. They are going to destroy the US dollar. At that point, you better pray to God you're holding on to some gold and silver, because it will be a matter of time before you see hyperinflation coming to America, and it won't take very long. So they're in a real predicament here. But I think, at least for the remainder of this year, it's full steam ahead, 1 to 2 more rate hikes, and sit back, because things are going to continue to break apart in this economy. And at some point, the stock market, it doesn't even matter what the stock market does. If the Dow Jones goes to 50,000 points this year, next year, does it really matter? Is it helping you in any way at all? Because I see people hurting. I see people dependent on credit cards to pay their bills. And somebody wrote me today saying that, hey, the hotels are full, the restaurants are busy, they must be using their credit cards. And yes, I'm sure that they are using their credit cards, hoping and praying that, somehow things are going to turn around maybe by the end of this summer, and that they'll get themselves out of debt. But in the meantime, they're going to have a good time, and they're not going to worry about it. I think you better start worrying about it, ladies and gentlemen. Because if you don't, if you ignore the danger, you're not going to take action. The answer is not going out to dinner. It's not going and taking a vacation. It's not going and having a $10 coffee. Right now, you've got to take action and be preparing. That's what you need to be doing. That should be the strategy right now. Not denial, not living in a bubble, not drinking the Kool-Aid. The strategy is right now to get small, get diversified, be very versatile, be able and willing to adapt to this economy, because this is a new world, ladies and gentlemen. You have to adapt. And the people who are in La La Land, who continue to just spend and spend money they don't have, they're going to pay a very, very serious price here. Fox Business, triple P fraud fueled spike in U.S. House prices, report says. Yes, here's, we are living in such an illusion right now, where people were, buying $50,000 watches, $100,000 watches. That market now is collapsing. And of course, all this fraud, what was it, $200 billion or whatever it was in triple P money that was just used up in fraudulent ways. People, of course, they went out and they bought watches and they bought NFTs and they bought houses and they bought Lambos, and now that money isn't flowing like it once did. And so we have this big giant bubble that's filled with lies, deceit, FOMO, and triple P loans. And so they've caused a huge problem here. So you flooded the economy with this money. Then you had the Fed buying mortgage-backed securities, pumping up the housing market even more during a housing boom, a housing bubble. They made the bubble even bigger. And now, we have probably the biggest housing bubble in history. Not probably, we do. So, I was watching, speaking of housing, yesterday I was just taking a few minutes flipping through the channels, and so many of these home channels, flipping houses, investing in houses, decorating houses, landscaping houses, putting pools in the back of houses, fixer-uppers, fixers, flippers, it just goes on and on and on. And so many people were drinking the Kool-Aid watching these channels, and of course all of the Airbnbs that are now collapsing. And people watch this, and it just fueled the FOMO, pouring gasoline on the FOMO. And it's all coming to an end, ladies and gentlemen. How bad it gets, nobody knows, but I think it's going to be real bad. I think, there's people out there I watch on some of these business channels going, it's not going to be as bad as 2008. No, it's not. It's going to be worse than 2008. They just do everything they can to tell you the opposite. It's going to be a soft landing. There won't be a housing correction. Go back to 2007-8 when they were saying that it'll be a soft landing, soft landing, soft landing. There'll be no housing crash. There'll be no problem in housing. And literally within 6 months, everything collapsed. But they said this for years, and eventually it happened. How could it not when you were passing out homes like they were like candy to people who couldn't afford them? It was just inevitable what was going to take place. And here we are again today. Maybe the situation's a little bit different, but most people are not putting 20% down on these homes. Many people are losing jobs, and most people are being affected by runaway inflation. Their savings have been wiped out. Their retirements have been wiped out. Some of them, again, have lost jobs. And when you have a savings rate of 4.6%, how in the world do you get to safety when you cannot save money? And we know fuel prices are going to start going up here shortly too. So, we just have so many problems, and so many people have no idea what's going on. I know most of you do, and most of you are preparing. The hedge today, U.S. housing starts permits plunge in June. Housing starts were down 8% month over month, and building permits were down 3.7% month over month. Multi-family construction dropped over 11%. Applications to build multifamily dwellings, such as apartments, fell 13.5%. And I'm going to finish up with these last two articles. Best Buy reports massive price hikes on thousands of different products in the coming weeks. A few years ago, you would walk into a Best Buy and people, it was a crowded place. I enjoy going to Best Buy. I like that stuff. But now they are reporting declining sales and major price increases as the economy continues to be battered. Sales have been falling 5 quarters straight. Sales have fallen for Best Buy. The 6th quarter, they're expected to see sales drop by 11%. Profits are down 28% this year compared to last year, and conditions are about to get worse. So another indication that when people aren't buying big screen TVs and they're not going to Best Buy and buying gadgets and electronics, that's not a good sign. Not a good sign. And I'll finish with this last one, the hedge. This year is the worst. San Francisco Walgreens store suffers 20 thefts a day, chains up freezer section. So as we continue to watch the economy collapse, we are watching society collapse. It's just amazing to see the freezer section chained up with a big chain and a big lock because people are stealing ice cream. And this is absolutely shocking here. 20 thefts a day. How do you stay in business? How do you stay in business? And this is people robbing stores in their own city. And then these stores close, and then they go, well, why don't these stores want to do business in our city? Well, maybe because, you're stealing ice cream, or you're just opening up the ice cream and eating it right in the store and putting it back when you're done. Or you're stealing all the razor blades or all the candy bars or whatever. Why would a store, and how can a store remain in business under these kind of conditions? Social conditions, ladies and gentlemen, are collapsing also. And this is the one you really better worry about. I'm going to leave it there today. God bless all of you. All I can say is pray for this country. It needs a miracle. Walk the walk, ladies and gentlemen. Continue with your preparations, your training, your physical workouts, your mental mindset, your skill sets, everything. Be productive. And be proactive, ladies and gentlemen, because too many people are going to wait too long and they're going to react and be reactive, but they're not going to have the tools or the mindset or the preparations to react to this. So you need to be very, very proactive right now. Have a wonderful day. God bless every one of you.